My name is Dasha. I lead events, community, and partnerships at Puzzle. We know that all founders are focused on building and growing, and there is never enough time. So we decided that taxes is a very essential topic, very often complicated and complex. And we decided to make your life a little bit easier. So we joined forces with Brex and Accountalent and invited our in-house experts to share their insights on what are the most important taxes deadlines you have to be aware of? What are the documents that it requires? And all other stuff tax related. So I cannot wait any longer. Let me invite Luke, our head of customer success and sales at Puzzle, as well as our in-house CPA, to the floor. Luke, the floor is yours. Let's kick off
Awesome.
the conversation.
Great. Thanks, Dasha, and welcome everybody to this presentation. We'll dive into the presentation and starting with some intros as well. So before we do that, I'd actually love if in the chat just to get an idea of where everyone is calling in or watching in from. So if you could just post your city or state or country, whatever you want to put, we'd love to kind of just know where you are. And then while you're posting in the chat where you are, it would also be really great if you have any expectations or questions that you want to get out ahead of time. That would be really great for context for us. So while you're doing that, I will jump over to my screen here and I will share. I'll click slideshow. Um, so like Dasha mentioned, we did partner with Brex and Accountalent for this year in tax readiness for founders presentation. On this presentation, we're going to go over three main things: how you should pay for things that are business expenses, how you should track them, bookkeeping system, and then, picking a tax account, and basically just going over what all is involved there. Uh, Without further ado, I'll give my actual intro. I've been doing online tax and accounting for startups for over a dozen years, including being at Bench in the early days. I had my own tax firm for about 5 years, and I was at Pilot before joining here at Puzzle as head of customer success and our accounting partnership. So next we have Kevin.
Thanks, Luke. I appreciate it. Hey, everybody. My name's Kevin. I'm the controller at Brex, and I actually joined Brex as the first accounting and finance hire back in 2018 when we were, 10 to 15 employees, one entity. And I've been fortunate enough or crazy enough to be able to scale with the business to where we're at today, which is, 25 plus entities operating in 5 plus countries, going through all sorts of year-end audits and all sorts of fun growth over the past handful of years. And prior to joining Brex, I was in the audit group at PwC.
Awesome. Thanks, Kevin.
Hey guys, welcome. I just wanted to say thank you to both Luke and Kevin. It's a pleasure to be discussing these topics today with both of them. I'm John Jeanson. I'm the CFO at Accountalent. Over the past few years, I've had the chance to work with hundreds of startups and developed a real passion for helping organizations like yours be compliant with tax and accounting responsibilities. Accountalent is a tax and accounting solution for a lot of startups. We've serviced 5,000 startups over our 20-year history. And our focus is really on income tax compliance, R&D credits, bookkeeping. A little background on me. I started with Ernst& Young after school and was there for about 5 years. I left there. I went to one of our clients, which was in the defense industry. They were then acquired by L3 Technologies. And great opportunity. I was there for 13 years. I was actually part of the integration team between L3 Technologies and Harris Corporation, which was a great year-long experience. And since then, I've been with Count Talent for about 2 years and very excited to discuss startup taxes and responsibilities and key deadlines today.
Awesome. Thanks, John. Yeah, to that point, something that I just want to make really clear, if you have a startup, if you are a founder, you have to do accounting. Every company has to do accounting as part of your articles of incorporation, beginning in the first year. And we'll talk a little bit more about what accounting means, both from a bookkeeping point of view and a tax point of view. But before we go in there, I'm going to let John talk a little bit about the most important slide you might want to screenshot right now, if you don't have these burned into your brain.
And don't worry, I think this slide comes up again, Luke. So if you don't get a screenshot of it now, you'll get a screenshot of it at the end. Um, yeah, and to Luke's point, I mean, a lot of startup founders, not one of the first things they do is set up bookkeeping, and really it's critically important that you start with accounting from day one. It's just going to set you up for success, and a lot of startup founders don't want to deal with some of the back office issues that they will otherwise have to face if they don't set it up for success from the get-go. And a lot of startup founders will also sometimes confuse that, hey, maybe if I need a bookkeeping platform, I also need a bookkeeper. And I don't know that that's what we're saying today. Having a bookkeeping platform helps organize all of your business expenses. You want to make sure you have a business bank account, a business credit card, have that link into a bookkeeping platform. Founders can usually in the beginning, during bootstrapping and initial funding, founders can typically handle a lot of the categorization and deal with the bookkeeping themselves, at least initially, and then they should hand it over to a bookkeeper at some point. But we're talking about the bookkeeping platform. That's the critical piece, and that's a piece that you just want to make sure you have, and you want to have your accounting all squared away. Um, so yeah, that's to Luke's point, and then just some of the to be prepared for taxes. It's important to think about some of these key dates. So first is January 31st. That is 1099s. 1099s is a form that you file with the IRS. You also file with your independent contractors. So you actually look through for the entire year and you say, okay, who are some of these independent contractors that I've paid throughout the year and or freelancers? And if it crosses a certain threshold, you have to issue them a 1099 before January 31st, and you have to issue the IRS a 1099. That way everybody knows that your business gets the business deduction and the business being paid has to include that in their tax return. So that's the importance of the 1099s. The other item on January 31st is actually Form 3921, also an IRS form. And that is typically startups will have incentive stock options. And so the business has to report some of that information to the IRS. Many of the startups that Kevin, Luke, and I work with are Delaware C Corps. And so if you're a Delaware C Corp, you do have to file the Delaware franchise tax by March 1st. That is a tax that, regardless if you're profitable or not, regardless if you've had any revenue or any expenses, you are going to owe the state of Delaware between $400 and $800, at least at the beginning stages, every single year on March 1st. And that's to be incorporated in that state. And they call that a franchise tax. March 15th would be for any sort of partnership returns, S Corp returns, multi-member LLC. So when you think of multi-member LLC, that ends up becoming a partnership return. And the reason all of this is due March 15th is because a lot of those taxes will work their way down and flow through to your personal income tax return at some point. And so we have to file these partnership returns before March 15th so that we can flow it through to the partners, to the members of the organization. That way they can include it in their personal tax return and still have 30 days to file their personal 1040 before April 15th. And finally, you have the April 15th, and April 15th is the corporate tax returns. That's if you're a Delaware C Corp, they're due April 15th. And that's both with the IRS and that's also with states. So in addition to that, you also have the personal tax return, sole proprietor, as well as if you have a single member LLC. A single member LLC ends up being a disregarded entity to the IRS, flows directly through to your 1040. So you file that with your personal tax return. What a lot of startups take advantage of is the 6-month extension. That is something that you can file for free with the IRS. You can file it for free with any state that you're operating in. And it gives you 6 more months to file your tax return. It doesn't give you 6 more months to pay your taxes. If, for example, you are profitable and you're paying taxes, you have to pay those taxes before April 15th. Or if you operate in a state that has a minimum tax, you have to pay that tax by April 15th. But you now have 6 months to get your books in order and to file your taxes. Now, if you already have a bookkeeping platform, your books will already be in order for April 15th. So key piece of advice there.
Absolutely. And then, John, as you were talking there, I actually realized that we forgot to put a new date on here. And I don't know if you know that off the top of your head, but the Board of Information filing, I think is what that's called.
Yes, yeah, it is. I don't have the date there, but we can certainly add it to the slides before we send it out to the team.
Awesome. Awesome.
Yeah, and Luke, sorry, can I just ask a quick question because our chat is already
Yep. Mhm.
overloaded with some
Yeah,
some
sure.
relevant. Yeah. Okay. Just one. We have one about, I think, can you go back to the slide with 1099?
Yes.
Yeah, I think we have one question about this forum. I think there's the deadline is January 31st, but there is a question, what is this threshold for 1099s, please?
Yeah, so I believe that threshold is $600. So if you've paid $600 to any independent contractor, even LLCs, law firms, if you've paid over $600, you should be issuing a 1099 to those businesses.
Got it. Okay. One more. I think it's about the form that you just mentioned. So what's the other form to be filled by January 31st? I didn't catch the name.
Okay, so that one that is the name of that, or the form number is 3921. And that form is if you've transferred any shares of stock to an employee through an incentive stock option. You have to notify the IRS of that. It doesn't typically, there's a lot of other specifics around that in terms of what needs to be taxable, but the IRS wants to be aware of those sort of events. And so that's a reporting feature. And to be honest with you, I believe that's the paper file that needs to go to the IRS by that point. I think if you're filing it electronically with the IRS, you do have a little bit of leeway. You have like another 15 or 30 days or so. But pay attention to January 31st. That way you're definitely not going to be late.
Thank you, John. I see we also have a lot of questions about receipts. We'll get to them later. Don't worry, it's there on the slides. And just one more. I guess this one is personal, but may relate to many founders. I'll read it out loud and then you answer like maybe in more general way. So I registered my LLC in June 2024. Do I have to pay the state tax in 2024, or will I have to pay it after completing 1 year into the business? I'm talking about the annual 800 fee. So I guess it's a question to everyone who registered company this year. So if you can just clarify a bit so we can move forward.
Yeah, so and Luke, if certainly
Yeah.
if you have any comments here, but if it's an LLC, it sounds like it's an LLC in the Delaware, established in Delaware, and so the fee is actually a little bit less for LLCs versus C corporations, and the date is a little different as well. Um, and so yes, the answer is yes, we would have to file. If you were established in 2024, then in 2025 you would pay for tax year 2024. So
I
you're, oh,
My guess is this might be an LLC question for California, and that's the $800 minimum tax exception for one of the entities. I don't know it off the top of my head, but maybe for a more specific question like that, we might kind of hold off on uh, answering those via email or even booking time with John if you want to
yeah,
grab
yeah,
him.
please.
Just in the interest of time, I'm going to go ahead and go forward here. So because everyone learned about accounting and taxes and stayed awake in all their classes, this why we're here to try and make this a little bit more approachable, make it something interesting. Kevin, did you have a lot of really fun accounting classes that you slept through?
I loved all my accounting classes. So I'm going to put on my professor hat real quickly and say accounting is the language of business, right? And so I know there's so many innovative companies, right, where we have people sitting on here and learning about this. And what I would say is sometimes it can be really hard, really challenging, right, to actually understand what the heck is taking place at those companies. And I'll say accounting is that great unifier, right? Or it's that great translator where you could know nothing about like their actual new operations. But if you understand the core concepts of accounting, you could pick up their set of financials and you can have a great insight into, hey, how is this business actually performing? What's their financial health? How are they pacing? How are they growing? And so, again, this is really just this great foundation or bedrock that then you can apply all sorts of wonderful analysis on top of. And so, definitely something I'm super passionate about, and I know everyone on this call is.
Absolutely. Awesome. So when we say accounting, and that first slide that I mentioned that everyone has to do accounting, we're really talking about various things all at the same time. So John's an accountant, Kevin's an accountant, I'm an accountant. We all do very different things. And so one, John talked a lot about the IRS and tax deadlines. That's like the biggest thing that I think people mostly think about. Um, Kevin actually does a lot more with FP&A and fundraising and valuation. I deal way more with just like the creation of financial statements, the very basic bookkeeping, which is an input for all of this other accounting. So, John or Kevin, I don't know if there's anything else you might want to mention on this slide here.
No, I think you nailed it, Luke. I mean, there's when we throw out the word of accounting, it means so many different things, right? And so I really appreciate the way you explain that to everybody.
Awesome. So speaking of, different types of accounting, there's a lot of that's really Kevin's domain here.
Yeah, and we can call this like the operational branch of accounting, right? Where there's all these jobs to be done, whether you're, the CEO or the CFO or insert whatever job title at your business, when it comes to, keeping your business up and running or launching or supporting all these different things, you need to find a way to get that work done, right? And there's a lot of SaaS solutions out there that help all these businesses do their jobs. And I think what's great is a lot of these companies, like Brex in particular, they ease that accounting, that technical accounting burden, right? On each of the founders that we have here on these calls, right? And so whether you're, standing up payroll, right? And you're saying like, well, I just need to pay my employees, but then there's, oh, well, how do you actually account for payroll costs? Or hey, I have all this activity happening in a bank account. Well, what are the journal entries and the debits and credits? And so I think that's been a great innovation that we've kind of seen over the past, handful of years where a lot of these solutions have accounting sub functions within here that then really ease the burden to ultimately take all this activity that's taking place in the real world and then pushing that right into their ERP of choice or their bookkeeping system of choice.
Absolutely. And I know Brex does a really great job of pulling in receipts. And if you have Brex integrated with Puzzle, you see the receipt directly on the transaction. So not only do you have the transaction from the bank feed, whether that's a credit card or the actual checking account, you see the actual receipt itemized as well. So that really helps with documentation, especially if you're audited or if your tax accountant is trying to figure out what this expenditure was to, maybe depreciate it or not. Cool. So this slide is essentially a list of things just to kind of get ahead of that we often get questions about. Uh, Number one, John, maybe you want to talk about that for a second.
Yeah, yeah. One of the things that you really want to focus on is, most startups, they're not gonna, they're waiting for VC funding. They're looking to release a product. They're looking to invent something new. They're looking to go to market. And there's just there's a lot of money that's being invested and a lot of money being spent. And maybe the revenue isn't matching the expenditures, at least up front. Most startups don't actually owe federal taxes in the beginning. So although it's critically important to file your taxes on time by April 15th, you're likely not going to owe the IRS anything. We had talked about the state of Delaware, the franchise tax with Delaware and other states that have minimum taxes, but federal taxes likely not going to owe much at all on that.
Yeah, people often say, how can I minimize my tax burden? And really or minimize taxes. I want to pay as little taxes as possible. And I think everyone on this call wants to help you minimize taxes as much as legally possible. But when you're operating at a net loss, there's no taxable income. You generally don't owe any income tax. But there is the R&D tax credit. So you want to make sure that you're still filing on time and getting that credit if you're eligible for it.
Yeah, I'm glad you mentioned that, Luke. And I think there's a slide up on here that I talk about the dates a little bit further, but filing on time is critical for all startup founders, but really where it's critical is you do miss out on the refundable R&D credit if you don't file on time. You can still capture the R&D credit, but you're not going to get the refundable PATH Act that goes against your payroll taxes if you file late. So you never want to file late because of that. And then we also have some foreign founders on today. And when you have foreign ownership or you have foreign subsidiaries, If you don't file by that April 15th deadline, you run the risk of heavy, heavy fines with the IRS. So much so that we've seen it bankrupt these startups. And it's kind of ridiculous to think about how heavy these fines are, but that's how serious the IRS takes filing on time when you have those foreign subsidiaries and foreign ownership. So at the end of the day, always hit those deadlines.
Absolutely. Kevin, maybe you want to talk a little bit about out-of-pocket expenses and just maybe how Brex deals with them.
Yeah, of course. Happy to jump in here. And so, thinking about how you're building your books or how you're building your financial statements, and you have all this activity taking place, whether it's paying vendors or whether it's incurring expenses on a corporate credit card or something like that. And so there is a substantiation requirement, right? Where you want to have that valid backup, right? Whether it's a receipt, whether it's an invoice, whether it's a proof of payment that is substantiating the nature of those expenses that you're incurring. And so that's something where a tool like Brex can come in and automatically capture receipts, memos, certain information related to the transaction, just so that when it comes time to hand over those financials to somebody like John, they can come in and sort of help you maximize um, your tax positioning.
Absolutely. Number three here, I have may need to file in multiple states. This comes from everyone forming a Delaware C corporation. And if you are a startup that's looking for funding or funded, totally makes sense to be a Delaware C corp. But even if you're a Delaware C corp, you have to register in states where you have employees and maybe even revenue associated. If you don't live in Delaware and you filed a Delaware LLC, you you did it wrong, and you probably want to close down the Delaware LLC. But I'm not your tax accountant. Talk to your tax accountant. John could talk to you about it. Happy to go in more there. But point is, tax filings can become very expensive. We live in a world now where remote work is very common. Like I'm not even in the US right now. I'm in Vancouver, Canada, and that necessitates that there are more filings. So even if you don't owe income tax, just got started, if you have employees in 50 states, you could end up having to file a really expensive tax return. Kevin, maybe you want to talk about the cap table?
Yeah, I mean the cap table, one of the most important, document or sources of information, right, for every company out there, just you know, how ownership is tracked at the company, as well as making sure that it's updated, as you're potentially issuing new equity awards to your employees, as well as potentially issuing equity to investors of the company. And so definitely something that you want it to be as accurate as possible at all times.
Absolutely. And I guess I actually skipped ahead to number five when we talked about R&D tax credits. So uh, make sure you file on time so you can qualify for those credits. So Kevin talked a bit about some of the operational side of accounting, which is banks and credit cards, payroll, that sort of thing, even invoicing, things like Stripe. At Puzzle, what we are is we're the general ledger. A general ledger is an accounting system. You compare with QuickBooks Online or any of the others like Xero that you may have heard of, or possibly even FreshBooks. So essentially, what happens is all of this data gets translated into three basic statements. The income statement, sometimes called the P&L, which stands for profit and loss. So it's just an acronym P and L. The balance sheet and the cash flow statement. So I'm going to talk a little bit about each of these. So an income statement essentially just shows your income, your sales and expenses. This is over a period of time. So the income statement for January, the income statement for December 2024, it can be any period of time. Whereas the balance sheet is a point in time, any point in time. It could still be the end of January or the end of 2024, but it shows the cumulative history of everything that happened up to that point on the balance sheet item. The cash flow statement is something that I learned a lot about when I was going over my CPA exams and have not really touched much since then. I don't know, Kevin, you might be the only one who really deals with the cash flow statements currently.
Beautiful statement. So much, you can tell so much about a business based off of that one.
What can you tell about a business from a cash flow statement?
I mean, I think today, in today's, say, interest environment, there's a lot more focus on like, hey, what are operating cash flows looking like? And then how do people leverage those operating cash flows to figure out, well, what is somebody's runway?
Mm,
Runway is one of those metrics that people care so much about. But then there's a couple other components, investing and financing activities, which, hey, whether that's raising debt, raising equity, making certain purchases for other reasons. But I'd say the operating cash flows is probably the most relevant at today's date.
absolutely. Absolutely. So again, this is the middle step once you've set up your spending accounts, your, Brex accounts, and then you've connected it all to a general ledger like Puzzle. And then this is the raw material that eventually gets handed over to John to do the actual tax return. But yeah, I guess with that, maybe John, I'll turn it over to you to talk a little bit about cash and accrual.
Yeah, I'd be happy to, Luke. So the way to think of this, there's kind of two different methods that a bookkeeper might track your books, or a tax accountant might file your tax return. So for the majority of us, when we're filing our individual tax return, we're doing it on a cash basis, meaning if we were paid by our employer before 12/31, we are going to include that in our tax return. But anything that was paid to us after 12/31 will be included in our next year's tax return. Even if, for example, we earned it. A lot of us end up getting paid maybe the 15th and the 30th of the month or every other week. Well, if we get paid on Friday every other week, there's a chance I worked a full week and didn't get paid before 12/31. But I don't need to include that in my tax return because it was never paid to me. So I didn't receive the cash before 12/31. Therefore, I didn't need to include it in the tax return. On the accrual basis, where a lot of corporate tax returns are cash or accrual. The recommendation is for us anyway, coming from Accountalent, our recommendation is always start with accrual because at some point, if you grow large enough, you're going to be forced onto the accrual basis. So why not start there if you can? Puzzle actually does an excellent job of presenting your books in both a cash basis and accrual basis. But on the accrual basis, what you're thinking about is even though I haven't received that income, I still need to record it. Just because I wasn't paid by my customer doesn't mean that I don't record it. I earn the revenue and therefore I would recognize the revenue that tax year. Similarly with expenses. If, for example, I incurred a lot of expenses of labor and I didn't have to pay that labor until January 10th, well, the expenses within that December timeframe through December 31st, I would want to make sure I capture that expense on my either my bookkeeping or my tax return there. So it's always cash versus accrual. Cash, a lot of individual, accrual, think business.
Awesome. Love it. Yeah. I think when
And
you're
yeah, I can chime in here, Luke.
yeah, please
But
do.
I'd also say accrual basis can be a little bit of that like aspirational, right? Like there's certain elements or certain activity out there that, depending on the scale of your business or, how readily available certain information is for you. Sometimes cash basis, it's just like it's the easy way to do it, and don't spend hours and hours and hours trying to get to that perfect accrual basis under the matching principle that someone was telling you.
Yeah, accrual gets expensive. So if you want to do full real accrual, you might be spending more money than it's worth, really, to make those books happen. Cool. So, we talked a little bit about accounting and the different ways that it's applied, whether that's like a tax way or, we didn't talk about budgeting really yet. But just want to get out in front of some of these other roles that you might be hearing about. And then we'll also give you some advice over like who you should hire first. But basically, the bookkeeper is the one who does bank reconciliations. If you don't know what a bank reconciliation is and don't want to learn, you should hire a bookkeeper. The accountant themselves is more like a Kevin or a John who is doing either like GAAP financials. GAAP again is even that aspirational accrual accounting beyond the cash accounting or tax accounts. A controller, that's what Kevin's job is. Maybe I'll let you explain more about what a controller does.
Yeah, so I'd say today, the job has evolved into, say, managing these processes and doing that constant risk assessment of those processes to determine, hey, in what situation, um, you know, is a process that you've set up scaling correctly, right? Is a system that you implemented, is that doing the job it needs to do, or has it become inefficient? Has it become broken? Has it become, overstuffed with manual errors and things like that? And so you're constantly evaluating each of those processes, each of your folks, and also getting that pulse check of what's taking place at the business to see how do you set up the various processes so that then you can account for this activity as close to real time as possible?
And John, you were a CFO before, is that right?
Yeah. So and I can chime in on this a little bit. So the way I look at a CFO is it's a true business partner. And what I mean by that is, you're working with your CEO, you're working with your COO, you're working with other folks within the organization to really drive the business. And it was a previous colleague of mine that said it best. It was, a lot of accountants, and again, I'm an accountant, tried and true, and kind of worked my way up to the CFO position, but a lot of accountants are known for reading the news. That means, hey, this is what happened the last few quarters, and I'm telling you about it versus a CFO and a controller that's a business partner. You're going out there and you're making the news. You're part of the business. You're part of the business decisions. You're part of driving the strategy. Understanding the budgets, figuring out what does our runway look like? Do we have too many heads in the business? What are some of the controllable expenses versus fixed expenses? So you're looking at all of that and you're using data to help the business make data-driven decisions. So that's the kind of the way I look at it as a CFO. It's kind of a progression, from a bookkeeper all the way through CFO, more task oriented versus more kind of strategic thinking. So that's the way I look at it. When I look at this list.
Awesome. So I talked a bit already about what a bookkeeper does. They may do more than just reconciling and categorizing, but that's really the baseline here is the first two bullets there. They may also be paying bills for you or running payroll. So if you're engaging a bookkeeper, make sure that you really understand what it is they're doing. And that's why the pricing for bookkeeping can range anywhere from, $200 to thousands of dollars a month, depending on the scope of services that they're providing, how big your business is, and transaction volume, that sort of things. It would be very rare. I don't know actually why I put R&D tax credits. I don't think they would almost ever file R&D tax credits. They don't file taxes usually, with the exception possibly of sales tax. They're typically not building financial models. That was actually something I meant to mention here is like the bookkeeper, accountant, controller usually are doing things based on what happened in the past, whereas the controller kind of bridges that as far as some of the policy making, whereas the CFO is more of like the forward-looking person. I always joke that the CFO is the person who can be wrong and not get fired, where the other three would.
That's right.
Uh,
And to your point on the R&D credits, Luke, what we actually see a lot of is you're right. The tax CPA, the tax accountant is responsible for filing the taxes, filing the R&D credit with the IRS. But what we do see a lot of the bookkeeping teams, we work with a lot of bookkeeping partners, they will enter the R&D credit into your payroll platform. So I think that's where the bookkeeper comes in and says, okay, I understand what the credit is. Let me go make sure I take advantage of that refundable piece that's going to offset the payroll. So it's kind of a payroll entering structure.
Good point. And then, of course, the better the records are in the bookkeeping system, the easier it's going to be to claim the credit because you'll have that documentation in place ahead of time.
Right, right. And I can
Uh,
jump in here, Luke, if you'd like. So one of the big things that some of our clients will say is, hey, you going to review our books at the end of the year? And can I hand them to an auditor as audited financial statements? And we're just like, absolutely not. That's not what a tax accountant typically does. What a tax accountant typically does is they're waiting for you to provide, we tax accountant are waiting for you to provide the financials. Maybe you have a bookkeeper, maybe you're handling it yourself, but we don't always have the visibility into what you're doing day to day with your books. We're not evaluating it for completeness. What if you had the separate bank account that was never linked into Puzzle? What do I do about that? Um, So it's those types of things where when we receive your financials, the financial statements that Luke just described, when we receive those, we're looking for obvious mistakes. We're looking for credit opportunities. We're going to have a bunch of questions as we go through this. Why did you categorize it this way? Is this what I think it is? We'll go through the general ledger. We'll identify transaction by transaction, see if it makes sense to us, and then we'll follow up. But it's definitely not an audit, and most of the time, when you sign an engagement letter with a tax firm, the tax firm is putting the onus on you, the startup founder, and your team that the financials are accurate. At no point will a tax accountant sign off that the financials would be accurate. So it's just something to keep in mind.
And the other thing I'll point out that even during an audit, the engagement letter, so the contract you sign with your auditor says it is not built to catch fraud. So under almost none of these situations, if somebody's committing fraud, if they're doing it really well, the tax accountant and the auditor are not looking for that and oftentimes won't catch that. So I guess just to back up for a second, the reason I put bookkeeper and tax accountant in expanded detail here, these are the people you need to hire. These are the two at first you must hire. Uh, you don't need Kevin until, at what point would they need a Kevin? Like a controller level person?
So I actually want to take us, if you wouldn't mind going back to that question, or what more slide? Or yeah. And so there's a difference between obtaining like bookkeeping services and hiring somebody as like an FTE as a bookkeeper, right? A lot of us here, we want our businesses to grow. We expect our businesses to become more complex. And so, yes, right, bookkeeping services are the lowest level, right, of work being performed on the accounting side. And there's when we went back to the slide with that showed all those different systems or tools that help you sort of handle the operational nature. A lot of them kind of have automated bookkeeping services kind of built into those products themselves. And so you wouldn't necessarily need to hire a bookkeeper who may not have the most experience to actually like scale with the business. And so what I would actually recommend is potentially one, finding like an outsourced accounting firm, right, to sort of assist with building out some of those the foundational accounting processes for you while also providing, call it like the boots on the ground lowest level work. But then, I joined Brex when we were 10 to 15 employees. I have a CPA. And so I was kind of doing all the different levels of work up, from bookkeeper up to certain levels of the CFO side. And then it's, hey, what can I automate, right? At a certain point, you need to figure out, well, what can, at a certain, do you just have to make an additional hire onto the team, whether that's a bookkeeper, whether that's an accountant, whether it's a CFO or something like that.
Love it. Okay, we've covered a lot. I'm trying to answer some of the questions as we're going here, but we do have more time at the end to go over the questions as well, so keep those coming in. We're going to talk a bit more about why it's important to file accounting or to do accounting. The number one thing, especially early days, is to keep business and personal spending separate. My analogy here, I haven't been using all my analogies. My analogy here is like if you're doing laundry, you keep your whites separate from your colors, at least your whites separate from your darks. So you want to keep your business clean. You want to keep your financials clean. The whole reason you form an entity, LLC or a C corporation, is to give you a level of liability, legal, tax protection. And if you're mixing it together all the time, then what can happen is you can pierce the corporate veil, meaning you no longer have the protection that that entity was initially set up for. Excel is not a proper accounting system. You need to have an actual bookkeeping system like QuickBooks or Puzzle or Xero, even in your first year. You want to make sure you're filing your tax on time. We have that slide coming up here again as well. Certainly want to be reviewing your financials regularly and then managing your burn. But guys, is there anything you might kind of double click on there?
No,
Um,
I don't think so.
yeah, and I would also just say, right, like when accounting is going well, you're providing your leaders, right, with the right information to make important decisions off of, hey, should we be investing here? Should we be spending less here? Should we be doubling down on this? And I think having timely and accurate financials is critically important to running your business.
Absolutely. How not to pick an accountant. Definitely don't want the cheapest one. You also don't want the fastest one. And related to this, uh, if you're looking for an accountant during tax season, you are too late. John, when should somebody be engaging with you ideally to file on time?
Yeah, so I would say, this is the time frame, right? November, December, January. Find a tax accountant. Do not do it in March and April. There's just a lot of folks that just won't even end up calling you back, and it's frustrating for a startup founder. Like you need to file it. You want to hit the deadline. You don't want to be late. But yeah, you should definitely plan for the January timeframe. Otherwise, hopefully there's a firm out there. I know we do this, but hopefully there's a firm that will say, hey, we'll file the extension for you for April 15th. That gives us 6 more months to figure this out for you because we don't know enough about your business yet to be able to go ahead and do this. So, and I love this hourly billing that you have here. Some startup founders are so well versed. They've gone through accelerators. They have a lot of startup. They have a founder network, and they know this stuff. But there's others that they're brand new to it, and they might hire a large accounting firm that charges you by the hour. There are so many startup friendly companies out there, and that's where you want to start with it. Brex is incredible with the interest it provides to its clients. You're really taking care of them, not charging fees on transactions, and the same thing with Puzzle. And so for tax services and accounting and legal services, you want to try to find somebody that's a fixed fee engagement. You don't want to be paying those hourly bills because you are going to have a lot of questions. And you don't want to pay every single time you have a simple question. So that's definitely something you want to think about.
Yeah, so what you're saying is 6 months ahead of time, you really need to be engaged with a tax accountant. And in part, something to point out, there is actually a shortage of accountants. There is not
Mhm.
enough, there's more than enough accounting to go around for everybody, meaning that there's just a capacity problem right now. And that's part of why, at Puzzle, we're trying to really optimize and make workflows more efficient and faster to help accountants serve more clients at one time. But regardless, getting a good accountant as soon as possible is really important. Okay. These are things that you need to provide by your tax accountant. I'll just point out that number one, financials come from your bookkeeping system. That's the income statement, balance sheet, or P&L balance sheet that we mentioned in the cash flow statement. So that's something that Puzzle would provide if you have that all set up properly and you're either maintaining it or you have a bookkeeper maintaining it. But John, I might turn it over to you to talk about more of this.
Yeah, yeah, and the other thing I'll jump in and talk about Puzzle is, Puzzle has this ability to download tax documents. So Puzzle already knows what your tax CPA wants. So if you are on the Puzzle platform, at the end of the year, after you've crossed 1231 and everything's reconciled, everything's clean, you just download this tax document, and it includes essentially everything here except for the capitalization table, the cap table, the ownership changes, that sort of stuff that is going to come elsewhere. But yeah, the vendor payments, what you've paid, the financials that Luke went over earlier, sales by state, payroll by state. That's important because tax accountants need to figure out what states do you have nexus in, where do you have physical presence or economic nexus. Physical presence would be employees, remote employees in those states. Economic nexus would be crossing a certain sales threshold. But all of this is going to be important for your tax accountant in order to be able to prepare and file that tax return for you.
Love it. Okay, we're nearing the end here, so we just have a couple more slides. So I think we're not going to have to rush too much here, which is great. This is that slide that we went over at the beginning. So hopefully this doesn't feel as daunting now. And if you didn't get a screenshot, now is the time to get a screenshot of it. Anything that you want to add here, John?
The only thing I would reiterate here, Luke, is, we've talked about this, all three of us have talked about this, but you need a way to pay for things and you need to separate it from personal and business. So you need to set up that business account and set up that credit card. You need to link that to a bookkeeping software so that you have financials on the ready for your investors, for your tax account, and there's multiple other reasons. And then you need a tax account and you got to make sure you file your taxes on time. These are the key deadlines that you need to think about. All of it coming earlier in the year, which is why we structured this webinar at this point. Um, but yeah, biggest thing is start thinking about it as soon as possible. If you haven't already started to think about it, start to think about it right now.
Awesome. I guess, Kevin, anything else to can add before we look at more questions? I know that we kind of bounce back and forth there.
No, nothing to add. Happy to jump into all the fun questions that are trickling in.
Awesome. So if you have any questions specific to either one of us, you can email us here. Happy to chat about any of this stuff. Of course, I'm more on the bookkeeping front, but have done some tax stuff, so I can be dangerous there. Kevin can certainly get you in touch with people at Brex if you want to set up an account there. And John is happy to work with you on getting your corporate tax filing. I think I'll point out, maybe for John's sake, that you guys really do corporate tax, so not personal or LLC tax so much. It's more just the like the Delaware C corps. But
Yeah.
Yeah. So, Luke, Kevin, John, thank you so much. That was amazing. But I think we have a lot of questions. So, if you don't mind, I'll read out some of the burning questions from the chat, and you feel free to answer whoever wants. Um, closing the receipt topic. I guess receipts are something that a lot of people have in mind and struggle with. There were different questions, and I know you covered a lot, but let's just do it again. If some questions, repeats, I'm sorry for that. Just let's make it clear so people understand it for sure. So a question, should we have all the receipts? The company policy requires only for $75. And there were some other questions also regarding what is the minimum, when do you actually have to provide them? So receipts, who will be the one to answer?
I can take that one.
That's
And
exciting.
so yeah, so the $75 threshold is the IRS threshold, which it sounds like your company policy is copying and pasting over. Um, it's great, right, to have as much internal documentation as possible, because say you have a world where there's 300 transactions at $72 each, right? And if you don't have a single receipt for any of them, you might get some questions if the IRS were to come through, or if an auditor were to come through and check on the validity of your financials. And so I would say spend your time right where it matters for the business. Um, and that's where a tool like Brex can kind of really assist by, say, like automating that receipt capture piece. And so then, hey, you have more of that good internal documentation, um, but without having to spend hours and hours and hours of manual work tracking them down and collecting those receipts.
Yeah, and also a quick follow-up because I saw it also in the chat. What happens if you lost a receipt? Ba 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 bum. If you can't find it, are there any ways to I don't know, to solve the situation?
Yeah, and so the other piece to the compliance on having the receipts is a business memo or a business justification. It's likely going to be fine, right? If you don't have 100% of your receipts or memo or receipts in place, but at the very least, you should have some form of business justification, whether it's a couple sentence write-up just about what it was related to.
I think the best thing that you can hear is it's gonna be fine. So don't worry,
Yeah.
you'll get to the point. Everything is gonna be okay. Okay, so we have next one. So I know you covered it all. I guess it's probably for John or Luke, I'm not sure. So at what stage do you actually need to hire a CPA? So what if you're a pre-seed stage company, pre-revenue? Do you still need it or you don't? So ideas?
Yeah, I'll jump in here, but that whenever we table, we go to different events and we talk to a bunch of founders, and it's just a great opportunity to hear what's going on. And I undoubtedly get this every time. and it's, hey, I've had a startup for 3 years. We haven't filed taxes, but don't worry, we're pre-revenue. And so that's a big no-no. You still need to file taxes, regardless if you're pre-revenue, regardless if you're pre-expense. If you have no revenue, no expenses, you still need to file your tax return. And the reason being is you may have minimum taxes in certain states. And then also you don't want to give up that opportunity to take advantage of the refundable R&D credit. And also, if you have any foreign ownership or any foreign subsidiaries at all, you need to make sure you hit that deadline. So just something to be aware of. You do need to file, and whether you hire a CPA, a tax accountant, whether you try to do it yourself, whether you work with somebody else, you just want to file your taxes. You definitely want to file your taxes on time.
Mhm. Thank you so much, John. Yeah, I guess we have the next one. So I plan to set everything up in January. Do you have a recommendation on bank and credit card companies that can help me to set everything up?
I just responded on that, but one
Yeah.
that Brex would likely be able to service you. But then I would also go back to that list that Luke shared on the slide deck. There's a lot of great companies out there.
Awesome. Thank you, Kevin. Oh, I see another one from Walla. Hi, Walla. I see so many familiar names. This is amazing. Thank you guys for joining us. So the next question is, what if we're using resources, people we're not paying right now? The CEO, for example, and that we need to get back later. Should we add this to our accounting?
Just to make sure I understand the question, it sounds like right now you're not paying the CEO, but you want to track it to pay them later. Um, part of that might depend on how much of the company the CEO owns and how much accounting you want to do and what the relationship to the company the CEO has. Meaning you may want to accrue, well,
If
actually,
you don't
as
have a finalized
yeah.
agreement, yeah.
Yeah, I guess the risk here, I wonder, is if you're accruing some sort of wages, would there be any sort of a payroll requirement? I guess not. I guess you probably wouldn't have to worry about that. But the inverse often happens where somebody's getting paid out, and this is actually something I would add on when people are just when you're set up the company and you're transferring money from the Brex account to your personal Chase account, and you're like, oh, I'm paying myself for being an employee of the company. That is bad, bad, bad. And that is the reason that I always recommend that you at least work with a tax CPA to file your taxes, even if you're doing your own books, because that tax account that's one of the obvious mistakes they're going to catch is that you don't have payroll set up. And so if you're just transferring yourself out money from the bank account, business bank account personally, that really needs to run through payroll, which has appropriate taxes. If you do payroll wrong that way, that's one of the few areas you can actually end up in jail if you're doing that intentionally incorrectly. But I still didn't exactly answer you. I don't know if John or Kevin wants to give it a better shot at if a CEO is not actually receiving compensation, how would you track that?
Yeah, I'll jump in here. And if the CEO is not receiving compensation and they're not going to pay the CEO later for the services he's performing or he or she is performing today, then I think it is what it is. There's many founders that aren't being paid, and you don't record it into the bookkeeping platform. But if to Luke's point, if you are going to pay that person for the services that they are conducting today, then I think it is important to accrue that and make sure that it's well understood throughout. And yeah, you don't want to get into the habit of paying founders with a 1099. You want them to be W-2 employees.
Okay. Sorry, just there was one question and now we have some more. So give me a second. There are also like one question. I don't know if you can help with here. Like if the person wants to set up a S corp and then convert to C corp,
Yeah.
possible?
Yeah. I saw the S Corp. I have my S Corp book here. This is from 2016, back when I
We can
had
see.
my practice. And you can't really see it because of the way this is how
In the
big the S Corp
background.
book is. So if you want to set up an S Corp, I think they're really cool and fun and a great a tool to use for opening businesses. Just make sure that you actually are working with a tax accountant who understands them to give you really good advice. Short answer on converting, yeah, you can, but you usually are going to end up needing a lawyer to help with that.
Mm-hmm. I think like Vala is still asking about the question about paying to your CEO. Like later on, she just sent a comment that she's not American yet. And I don't know if it influences your answer, but if it does, let us know, guys. Because she's still in the process of getting her immigration documents.
I might suggest that you book time either like with John or somebody who knows your situation a little bit better. The danger in giving advice on something like this with partial information is a single fact could really change the advice that we would give.
Yeah, I think all three of us and a lot of our responses, we're kind of hedging what
We love to
we
say it
understood.
depends. It
Yeah.
depends. It
Right.
depends. It depends. Yes.
Right.
Yeah,
Yeah.
and I guess we can ask like one final one. I guess it's also like from me. I really love the slide where you shared how not to pick the accountant for you, but how do you actually pick? So you pointed out all these red flags, but just like maybe like one sentence on what to look at, like while talking to it. I'm particularly interested. Why not the fastest one? Because he will miss all the important details as a person with no accounting background. I'm really curious because I guess it's can be relevant for a lot of people.
Yeah, so and Luke, I know you helped build the slide, so certainly would love your input on this. But on the fastest piece, Dasha, what I would say is you want an accountant that's very detail oriented, period. If you're not getting an accountant that's detail oriented, it's very scary because you need to double and triple check a lot of things that are going on when you're submitting it to the IRS. And so if it's the fastest and they promise they'll get it done in a day, well, how many levels of review are happening if they can promise to get that done in a day? So I think that's where we're headed there. My recommendation for hiring an accountant would be have multiple conversations. Don't just go with the first person you speak to. Have multiple conversations. How did the conversation go? Ask specific detailed questions to each of them. How are they responding to it? What does it look like? And then kind of compare it from there. I think a lot of startup founders are just so eager to get certain responsibilities off their plate that they just kind of run with the first person they meet. And I would just argue it's worth having a few conversations to find that right fit.
Okay, and I guess like slow accountant is equal to detail oriented one.
Well, you don't want them to be too
Not
slow because they
necessarily.
gotta they gotta hit the deadline. So
Yeah. Yeah.
Okay, okay, yeah. Yeah, look, I don't know if you have anything to add to that, but thank you, John, for sharing the.
Yeah. I mean, I would say if you get a referral, like somebody from Brex refers you or somebody from Puzzle, like my goal, even as a CPA, is to help you get the right services matched. And that's why you're not going to see me recommending some of these companies that claim to automate everything. We're just not there yet. And that's why I have relationships with John. I've known Accountalent. I don't know if you noticed, I'm drinking out of my Accountalent
I
mug.
saw
I've
that, Luke.
known I've known them for, most of my career. And so over time, I've known to trust them because I've sent them hundreds or thousands of referrals and vice versa. And I know that they take care of their clients. So I think if you find somebody you trust who has experience with the referral partner, it's good to work with somebody who understands your industry as well, like R&D tax credits. But I think that's what I would say.
Thank you. Yeah, if you drink from your partner cup, this is a real partnership. I have a Brex hat in another room, but it's too far away, so Kevin, I cannot put it on right now. But yeah, so thank you so much, John, Kevin, Luke. Again, this was very, very insightful. And I bet there might be some questions more. So a lot of people asked to share slides. I guess what I will do like after this webinar is we'll definitely share the slides. If you want a recording, please also send an email to me. We're happy to provide recording on demand as well. And I will also share your contacts, guys, if you don't mind. So if someone wants to have more detailed conversations and be very specific and detail oriented so they can reach out to you directly and book some time with you. Thanks one more time. And
Awesome.
Thank you.
Thank you all.
Thanks,
Really appreciate
everyone.
it.
bye.
Have a good day. Bye.